The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, this is Marquise Harding, or the Reckless Investor. Today we're going to check and see if Costco is worth $90 million in our opinion, or my opinion, of Charlie Munger's portfolio. Let's see. What is Costco? You can read here of all the goods and services that Costco provides for its customers. But who's that? I think that's Mr. Market. That snobby rich guy right there. The only way to get rid of Mr. Market is you have to hit the like button and hit subscribe. If you don't do that, he will stay. He doesn't like when you like the video or subscribe, so please do that. But let's begin with the clear picture. This is the 5-year revenue growth chart of Costco, Kroger, and Walmart. We can see in the 5-year average of Costco, it has gone up about 39.41%. That is a check. The revenue for Costco has gone up steadily. It's not a giant jump or a giant fall, but steadily growth. We can see Kroger's not too far behind, but pretty far behind. Walmart, no question about that one. You can see all the people. This is why the revenue growth has gone up so much for Costco. People just love Costco. But here is an issue I have. Costco's profit growth is growing by 34 over the past 5 years for a 5-year average, but it's below Kroger. Why? There's more Costco's than Kroger's, I believe. But somehow Kroger has a better profit growth. I don't even want to talk about Walmart right there. But here I have something to tell you guys. The margin averages are about this. You got the profit margin, the gross margin, and the net margin. They're roughly about the same. And I didn't know how to really put them on the chart because I was filling the chart out, and they were giving me the same numbers. Like, why am I doing 3 different charts when I can just do one? So that's what I did. You can see Costco's actually having a better consistent growth margin than Walmart and Kroger. From 2016 to 2018, Walmart took a dip in their net income, but they pretty much got everything back and more. In 2019, while Costco had a steadily increase in their net income growth, the 5-year average about 53%. Well, Kroger kind of struggles, and now it's going down. Here's a weird thing. Walmart, the past 5 years, if you count 2021 through 2016, Walmart actually has made more money in free cash flow in 2020. The year of COVID. They have made more free cash flow than 5 years combined. Not combined, but the past 5 years. That's strange to me. 2016, Kroger and Costco had about the same amount of free cash flow. Let's check. See right here. Same amount of free cash flow. But now it has gone up about 88% from 2016 to 2021. Costco has raised their free cash flow by 88%. Kroger has raised their free cash flow, but not to the levels of Costco. All right. Price to free cash flow is pretty much sales to free cash flow. It is very similar to PE ratio, but this is more accurate because you're comparing cash to cash. Not numbers to cash, but cash to cash. It simply states if the company, based off of free cash flow, is undervalued, fairly valued, or overvalued. So if anything's under 15, in my opinion, that is undervalued. While in the range of 15 to 20, that's fair valued. Again, it depends on the industry that I'm reviewing. But anything from 21 to 25, that's overvalued but manageable. But however, their free cash flow their price of free cash flow 5-year average 44.28. That's too damn high. That means they're overvalued. And I'm talking about Costco. But look at 2016 to now. When I mean now, I mean 2021. Their price of free cash flow was almost 120. They're very, very, very overvalued in 2016. And by 70 price to free cash flow ratio points, Kroger was there. Than Walmart. Walmart was the best option based off price to free cash flow in 2016. Then 2017, Costco and Walmart had basically the same score. But since then, Costco, their price to free cash flow has been going up. Same with Walmart. But however, Kroger is a better value than Costco and Walmart. According to the price to free cash flow, yeah, it is. In 2018, they made a switch. Made that switch to have a better price to free cash flow than the top two. That's crazy to me. But because of the price of free cash flow, they get an X. Free cash flow yield simply is the yield on the company will make money. Simple as that. If they can make free cash flow, there's a yield. And you want this yield to be over 5%. So we are getting free cash flow yield, price to free cash flow to Kroger. Really? The smaller of the three brands is making better price to free cash flow and a better free cash flow yield? Come on now. 2016, Walmart had a better free cash flow yield. But ever since 2018, Kroger had the better free cash flow yield. That doesn't make sense to me, but to each their own. But 2017, Costco and Walmart share about the same free cash flow yield. But now it's sitting right here with pretty much with Walmart. Their 5-year average of free cash flow yield is 3.16. That's X. They need to be over 5. But here we get back on the right track. The track of debt to free cash flow. This ratio is taking if they have all their debt, how long will it take for them to pay off the debt with their free cash flow? On the left side, tells you how many years they'll take to pay off. And on the right, well, the bottom is the years. Kroger, even though they had a good price of free cash flow and free cash flow yield, however, their debt to free cash flow is outrageous. It was about taking about 22, almost 23 years to pay off their debt in 2017. That's crazy. Costco, about I'm gonna go 7. So we'll take them 2 extra years to pay off their debt. You want this to be about 5. If you want that score to be 5. But you take that 5-year average is about 2.92, which is almost 3 in a sense. It'll take them about 3 years to pay off their debt. And if you notice, Walmart is actually going up in 2021. That means they have more debt than they have free cash flow to pay off in 5 years. Walmart and Kroger are decreasing the shares outstanding, while Costco actually has gained about 3 million more shares than they was 5 years ago. So that's the X. So we're at 10 now. Here's the crazy part. And here's the crazy thing. Costco has a way better ROIC growth over the past 5 years than Kroger and Walmart. Kroger's is actually going down. Walmart is about staying the same, while Costco is actually bringing more value back to shareholders through invested capital. Their 5-year average growth is 22.28. Majority of the time and majority of the money that is being reinvested back in the company for shareholders is actually because of membership sales. That's their biggest push is membership cards. Let me do this one. I have this card. How much is it? $110. Do I enjoy it? Yes, I do. That means I can get a sale or whatever. My wife can get it and we will get cash back. But go back. I can't. Their return on invested capital is so outrageously better than the other ones, which is actually shocking to me. Then here, this is the return on equity, 5-year growth. Their 5-year average is 25.2%. Again, this chart is showing me that the returns are better with Costco. Even though, yeah, they're not making as much money as Walmart, the profit's not better in Kroger, which is stupid. But the returns, whether bringing it back to the shareholders, is better than both of them. Especially the giant of Walmart. Kroger's on a downward trajectory on the return of equity. Walmart is kind of plateauing, while Costco is on an upward trajectory. So they get a check. But before we check on the check score, as you lovely see the picture, we're going to look at the day chart on TradingView and see where we are from the highs that we had. All right, guys, we can see that this is Costco. This is their daily chart. So we got the red line as 20. And we're making a death cross. But we're going all the way back up. So let's get our lines. So that's where the high was. And see where we're at today. We're down 13.65%, but we're on an upward trajectory right now. From the low, when everything just fell apart. If I can, thank you. We are actually we're doing good with Costco. As those days were ups and downs, up and down. But we're doing good. Alright. That was the day chart. We can see they were about 13, almost 14% down from the highs. But let's check it. Costco has a gut check score of 10 out of 13, or it's 76.92%. That is a good score, don't get me wrong. I would love to see a company with 13 out of 13, but if I honestly believe that the company will fall more than the rat, yeah, I'm staying away from it. But Costco is a great company that will bounce back in a bear market. That's the whole point of the gut check score, for me to see if this company can actually handle a bear market. But now let's see what we should pay for it. This is my first discount cash flow model, and I get a fair value of $411.97. Right now, it's selling a little over $500. But however, my second one says it should be valued at 134. So what I'm gonna do is take the average of both of them, and you get a fair value of $273.20. So I'm gonna wait. I'm not gonna buy any more fractional shares. I'm not gonna buy any full shares, but I don't have any full shares of Costco until it drops. Right now, it seems like it's not gonna drop. So I'm gonna hold on and wait and see where it goes. But if you like what you see, you like the new style of how I'm doing things, please leave a like and a comment down below. Thank you, and make sure you hit the subscribe button, or Mr. Mark is coming for you. Thank you.